Like I said, I'm excited to do a team spotlight for this particular investor call. Danielle, many of you that are existing investors already know Danielle, who's our head of investor relations. But before we jump into Danielle, I'd like to introduce myself for those of you that don't know, because I see a few names I'm not familiar with. But like I said, I'm Samir. I'm the CEO and managing partner of Trophy Point. I'm in love with the act of real estate, of managing, investing, lending on real estate. I've done quite a few deals in my lifetime. I'm also an Army officer. I was an active duty Army officer, and now I'm a officer in the reserves with deployments to Iraq and Afghanistan. And many people ask, like, what did the Army do for you in this particular realm, the real estate investing realm? And I think the best answer is that for where I sit and what I do, decision making is probably paramount to, so more important than anything else, actually. It's more important than the finance. It's more important than the act of raising money. It's more important than the act of lending money. And I think being able to make sound decisions is what you should judge me by as the CEO of the business. And I think the Army was an excellent foundation for that, which is translated to other areas of my life. But like I said, there's my phone number. I'm always here to help. I love talking through real estate problems, especially. And like Mike Martin said on the below testimonial, he had come to us seeking money for a deal, and I asked him some questions, and it turned out that it would have been a terrible deal, not only to lend on, obviously, but then also turned out it would have been a terrible deal for him, and he would have lost a lot of money. And he says it would have took him probably a decade to recover from. And I actually take a lot more joy out of that because many people think you got to hit home runs in real estate. I take the opposite approach, having owned a lot of real estate, that it's actually more important not to lose than to make, because growing wealth is about compounding, the percent that you grow every year or whatever time period that's important to you. So growing at 8 to 10, 12%, I think is far more important as a long-term game than trying to grow your money 2, 3x or 2, 3 times over a 2-year period. I feel like that activity actually increases your risk. And I believe real estate is probably the best engine for growing your wealth. And steadily growing your wealth at 8 to 10% is a much better game in terms of improving your overall wealth situation. So that's the game I play. That's why I'm a big believer in not losing money versus trying to make a lot of money when it comes to real estate. So, but before we go to Danielle, I don't have a slide for Randy, which I apologize. But Randy, I'd love to introduce Randy Conley. He's our new CTO. We've brought Randy on to help us become better, right? And I think there's so many ways you could take that mandate or that directive, but we are in a fast-growing industry. We've become a top 5% lender nationally as well, by origination volume. And that means we serve a lot more investors. We serve a lot more borrowers. Our last count is we have 250 plus investors and 400 plus borrowers across our track record, across our 5-year history. And it's growing. We're lending 30, 40 loans a month now, and we're getting new and more borrowers as well, unique borrowers joining the Trophy Point platform as well. And Randy's been brought on to help us manage that and become more effective in how we serve everybody, because it's in the hundreds right now and it could be in the thousands quite soon. And I'm also equally excited to work with Randy again, because Randy and I worked together 10 years ago at another tech startup, actually. And he was sort of my counterpart. I was the guy that was the account manager, handling business level relationships with our customers. And Randy was my technical counterpart, making sure that my mouth was cashing checks that we could actually deliver upon. And I'm so happy Randy actually came through on every single one of those checks that my mouth wrote. And it was a joy to work with him. And I was really excited at the opportunity of bringing him on to work with him again on the Trophy Point side, because since we worked together 10 years ago, he actually also simultaneously joined another private lending firm in their technology division and leading a big part of that company's private lending arm as well. So Randy, I'd love to open the floor to you for a few minutes. Love to just introduce yourself. Tell us your favorite food. Tell us why you enjoy the private lending game.
Yeah, I'm super excited to rejoin Samir. As he said, we worked together previously and had a really good time. And in the time that we were apart, it's really interesting that I ended up in lending space, private capital, same way that Trophy Point operates as well, and was head of engineering of another company, and bringing all that experience here to help us scale and be more efficient. My favorite food is Thai. I like
Yes.
all Thai food. I am not necessarily a fan of things that are real spicy as I get older, but otherwise, anything coconut based, I'm down for. I love bringing value to our customers and our employees inside the company. That's why I'm in this space is helping people grow their wealth. And I think we're doing something good in the world and really excited about Trophy Point in particular and the standards that they hold themselves to in originating these loans and returning value to their customers.
Thanks, Randy. I
Nice.
appreciate that. Like I said, and we've talked about in previous webinars, so I won't belabor the point, but risk management is probably the number one thing that I care about inside Trophy Point. And Dave and Nick, my two partners, care about the same thing as well. But let's move on. So if you just joined us, and there are a few people that did join us, on the bottom of your screen, there's a Zoom bar and there's a Q&A button. So use that Q&A button, please, for questions or even general comments if you have them. And we'll answer questions as we progress throughout this webinar. Our goal is to always keep these things to 30 to 40 minutes. We'll talk for about 20, 25 minutes, and then we'll keep the rest open for questions if there are any. But our goal is to get out of here by 12:30, 12:45 at the latest. I'm going to reshare my screen, and then I'm going to reintroduce Danielle. So I'm equally excited to also introduce Danielle Banks, who is our head of investor relations, and she's been with us for almost 18 months. And I appreciate Danielle on so many levels, but the one I'll pick out is she's a joy to work with. We work with a lot of investors and hundreds of them at this point that have entrusted us with almost $100 million as well. And she herself, since she's joined, she's actually processed about half of that because our growth is exponential. And we've onboarded about $50 million worth of investors and 126 of them, as she pointed out on this slide, since the beginning of 2024. And Danielle's been a part of every single one of those relationships that we've brought on board. And I prize relationships just as equally as managing risk in many ways. And being able to listen as an extension of me, I really appreciate that about Danielle. And she lives in Oregon, actually. And Danielle, I'd love to open up the floor to you as well. Share us your favorite food, what you enjoy about Trophy Point, and maybe what you enjoy about working with investors.
Well, thank you, Samir. I appreciate that. And what I enjoy about working with Trophy Point, I love Trophy Point. I love everybody who works here. Everybody gets along. We meld together so perfectly. It's a great group of people to be with, and it just makes it a joy to come to work every single day. What I love about my investors is assisting them to grow their financial security. Every time a new investor comes on, I enjoy sharing stories, finding out what their goals are, helping them to be better financially. I've always been a numbers person, so it's another reason. But yeah, I really enjoy being with Trophy Point. And then what is my favorite food? What's my favorite food? Oh, good gosh. And let's see here. There's Thai, there's Italian, there's sushi. You know, I love it all. I can't say that there's any one, any one
Good.
particular.
You're an equal opportunity.
There you go. Connoisseur.
Yeah. So throughout these investor calls, I'm going to try to bring in more and more of our team members because some of the feedback we've gotten from investors is they want to meet the rest of the team and not just hear from me. And Trophy Point now has grown to 40 professionals inside the firm as well. So we'll do a better job of bringing people in, and Danielle's going to be the focus for this particular call. But if you're new to Trophy Point, I'll spend a couple minutes on what we actually do. And that is we are a hard money lender. In many ways, we're like a private bank. And our business model is pretty simple. We take your money, which we give you 8 to 10.5% on, and then we lend it out at higher rates to real estate professionals and real estate operators that are in the act of buying and buying rental properties or investment properties in single family and multifamily real estate. So we don't lend on industrial properties. We don't lend on shopping centers or malls or anything like that. It's strictly residential based real estate for people that are trying to improve them and sell it for a profit, or there's an investment motive. And they pay us higher rates because of the speed and the client service and the fact that these are stabilized properties. So there's a degree of risk, but they pay us for that premium because we're doing all those things and answering their their need for that type of capital, which the banks are not capable of satisfying on any large level when it comes to residential real estate. So that's our business model. And, like I said, risk management is super important to us because me, Nick, and Dave, we have $8 million of our own money personally invested in the fund. And I'm actually the largest investor by dollar amount in the fund as well. And we take the first loss on any bad decision, bad deal that we do. So we're not out here, like Randy mentioned earlier, we're not here slinging money and slinging loans just for the sake of it, earning fees on it. I really have to live with my decisions, for better or for worse, if we screw it up. And I have to lose all my money first before an investor's dollar is touched. And I think you want to be in bed with a fund manager that is aligned with your risk, or at least aligned with the risk that they're taking. And I don't see that in any fund actually out there besides ours. And I think that's very unique to what we do. And I think that dynamic has translated in the fact that we have zero net credit loss on the deals that we've done. Yeah, we've had some problems. We've foreclosed on properties, but the actual loss on a net basis, on a portfolio-wide basis, has been zero. In many cases, we've had to take back a property and we actually end up making more money by fixing it up where the previous borrower failed. And that surplus alleviates any losses we may have taken on other foreclosures. So I'm really happy to report that we've never had to dip into my equity plus any profits and fees that we've also earned from any of the defaults that we've had. So here's here's a quick comparison on other asset classes that are available to you when it comes to options of getting reliable, steady yields. So you got REITs, treasuries, there are some high dividend stocks, and you could also invest in foreign debt as well. And Trophy Point by far blows all of them out of the water from a risk and return standpoint. So here's the latest milestones. We've lent out $240 million as at the end of last month. At the end of last quarter, that is. We've originated 1,200 loans. We've probably foreclosed on about 30, 40 properties. Again, though, the net of that is that it's actually been positive. We actually haven't lost any of the foreclosures. And maybe even more importantly, we've gotten paid back on about $150 million as well, which is now why we have almost $100 million fund. Here's the latest snapshot on loans made and loans paid back by month. So August was a large month for us. $9 million of loans were made, sent out the door, and loan payoffs have been steady between 4 and 6 million. So we're very happy about that. And we're managing about 386 active loans at any given time. And as we march toward a larger portfolio responsibly, we think we're going to hit a 500 active loan portfolio. And that's one of the reasons why we brought on Randy to invest in some technology that helps us manage all of that a lot more efficiently. Here's our offerings, 8 to 10%. We have standard investments and we have retirement accounts as well. I think we're a great option for retirement-based accounts. And Danielle, I think I'm going to bring up the first question here for you, which is from Val. Val asks, can you talk through the process of adding to their position in an IRA account with Advanta? Could I add to the existing note, or would it be an additional separate note with the associated additional fees? Thanks. So that question is from Val. Can you go ahead and answer that, Danielle?
Yes, I can answer that. So as long as it is the same type of investment, if you invested via your 401k, as long as the money is coming from your 401k, it can be rolled into the 401k with Advanta. Same with the IRAs. As long as it's going into the same account, there are no additional setup fees with Advanta. I believe the only fees would be the purchase from Advanta, so the purchase fee and then the wire fee. But yes, there would be no need to set up a separate account with Advanta. And then as far as it coming to Trophy Point, would it be a separate note? We do consider it a separate note. However, we can roll it all into one, and that would end up creating a brand new promissory note. So if you invested $100,000 your first time, you would have a secondary note if, like, let's say this one is $50,000. So you would have two separate notes with us, but you would have one account at Advanta. Thanks. I'm hoping that answers the question.
I think it does. And just to take one step back for those that are new, Our retirement accounts, you can't just like take money, you can't sell your stocks in Fidelity and then take it out of Fidelity, out of your Roth IRA, for example, and send it to us. You must transfer it to a third-party custodian who acts as the literally custodian of your retirement
Right.
qualified
Yep.
dollars. The federal government would consider it a withdrawal, and maybe an
A
early
withdrawal. Yeah.
withdrawal if you're younger than 59 and a half. If you try to just pull money out of your Roth and send it to us, you must use a custodian. We work with 12 of them. We're approved with 12 of them. It sounds like Advanta, and we don't pay Advanta. Advanta doesn't pay us, so there's no like monetary relationship like that. But we have found that Advanta happens to be probably the best that we've seen in terms of customer service and things like that. And
Yes.
Danielle, if you wanted to maybe opine further on that.
Yes. And I do find that Advanta is the easiest to work with. They communicate very well with both our investors and myself. We process a lot of paperwork together, and I will also add to Val's question that if this is something that you are looking to do, Val, I can send you the registration form. I will handle all the paperwork again for you. You'll just end up signing like you've done in the past, and we'll get it going. Yes, I do find that Advanta is one of the easiest custodians to work with. And I work with probably about 12 of them.
Yeah, thanks. So let's move on. So I'm really excited about this based on investor demand. Actually, sorry, let me pause 1 second. We got another question from Nancy regarding, and I'll answer. Well, I'll send it to you. I don't know if Danielle, you can see the Q&A, but
I can see them. Yes.
Okay, so Nancy says, I have my SDIRA funds in Inspira, formerly New View Trust. And I guess Nancy may be asking, do we work with Inspira?
I do believe we do have an Inspira relationship. Nancy, feel free to reach out to me directly. My information will be towards the end of the presentation, and I can confirm that information. But I do want to say that Inspira is one of the custodians that we have worked with.
Thanks. Cool. So I appreciate the questions. Like I said, if you just joined us, and there are a few that did, feel free to use the Q&A button at the bottom of your Zoom panel, and we'll answer questions as we move along. I'm excited to announce a pilot program, and I don't want to steal Danielle's thunder, but I'll at least start with why we're doing this, and then Danielle will talk about the liquid program itself. You know, one of the hallmarks of our investor relations team is getting feedback from you, the investor, and time and again, different people, many times over the last 5 years, over the life of what we've been doing, have said, do you have a program that doesn't offer a lockup? Because as you know, our standard programs require an 18-month lockup, and that's because we lend out money on 6, 9-month, 12-month terms, so we need to have money locked up for a period of time, and 18 months is our lockup. Other funds maybe 5 years. So I think we're still pretty good from a liquidity standpoint, or being able to offer a liquid type of investment offering. 18 months is our standard offering. But many investors have said, hey, look, I'm a business owner. I've got 25 to 100 grand always sitting around. I don't like the yield I'm getting in my checking account, which could be anywhere from 0.5% to nothing even. Or I don't want to put my money into a 3-year or 1-year CD, which would give me a higher yield, but I don't want to put it into a CD where I'd get penalized if I locked it up like that. So based on investor feedback, we came up with this program called the Liquid Note. It is limited to who we offer it to because it is a pilot, but we think this could address some concerns investors may have on wanting a liquid type product that could also help us, because we also have to have cash on hand at all times for ourselves for new loans that we're always constantly making, and balancing that with the cash that we get back from payoffs. So Danielle, I'd like to open it up to you and talk more about the Liquid Note program.
Sure. Let's see here. So yes, we just started rolling it out the end of last month. So it's 7% annualized, and it's a very short-term lockup period. So basically your first 30 days, even though it's not considered a true lockup, we ask that the funds stay with us for 30 days, and then we return funds within 31 days notice. So we still look at this, and we have a redemption form, and once you put in your redemption form, we pay out within that 31 days, and we always pay out for the end of the month. So it just helps to keep our accounting records and documentation in clean order. There is a $10,000 minimum investment with $10,000 minimum increments. We issue a 1099 INT at the end of the fiscal year, so January 31st. Let's see here. Oh, one of the other caveats with this program is that full notes have to be redeemed. So if you invest $50,000, then you must redeem that entire note. So that is a little different than what our standard note, how that is handled. But again, this is just because it's such a quick in and out, it'll just help to keep the records cleaner.
Thank you. Yeah, we will probably send out an email to all investors on this, like formally announcing it. So the pilot program is limited to existing investors currently because it is a new program. And so we think we've covered the 30, maybe 25 to 30 future questions and future pain points of rolling something out like this out. But we don't want to like roll it out en masse because we still are tweaking some things. But basically, it's a great way to earn money and then get your money back within 30 days, 31 days if you need it back. And I think earning 7%, especially in today's market, is still pretty good. And all of our other first loss provisions and all that stuff still apply to the liquid note as well. So Danielle, I'll pull slides for you and
Perfect.
from here.
All right, let's go to our first slide. So our brand commitment, the Trophy Point Way. We believe in responsive customer service, responsibly being flexible. Our team members are on it and we stand by our decisions. And so what that means is that we promise timely communication so to reduce any confusion. So my goal and my team's goal is to communicate with everybody within 24 hours. We provide versatile solutions while respecting risk. We're proactive in trying to solve the small problems before they become big problems. That's really big. You don't want, a small thing to blow up and become a bigger issue. And we show our clients that we're real. We communicate with them. We'll get on the phone with them. We'll have video calls. So we're here for you. That is the Trophy Point Way. Next slide.
Thanks.
And for the investor relations, our key services and values, transparency. We believe in being transparent across, all of our company information. We provide monthly updates, quarterly updates, and annual updates. We also facilitate understanding of our business model in easy to understand terms. We allow direct communication with decision makers. And what that basically means is that if you want to talk to Samir, we'll make sure that happens. If you want to talk to one of the partners, we'll make sure that happens. They're not in the background. They're here to also help. We believe in due diligence. We believe in people going out there and really doing their own due diligence and making sure that investing with Trophy Point is what they want to do. We give you that time and that space. We're not hounding you every other day saying, where's your investment? Where's your investment? We believe in just giving you some space. We'll every couple of weeks touch base. Yeah.
Sorry to interrupt, but do you want to tell them about the website where they can find all of our material?
Oh, yeah, that's a great point right there. So with the due diligence, we try to push everybody towards our website, which is trophypointcapital.com. And on the website is pretty much everything you could possibly want. We have quarterly letters on there. We have a fund overview. So it talks about the different interest rates.
Our latest audit is also there.
Yes, there you go. Our annual audit is there. It's basically all under our investor materials. So you go there and there is a lot to read. Our promissory note is there. Our PPM, our private placement memorandum is there. So we give everybody the chance to read through all of our documentation before signing up. So I do, if you're potentially a new investor, please check us out. So let's see here. Clarity, we believe in addressing all your concerns promptly, like I said before, within 24 hours, and reliability. We anticipate information that is needed and we respond proactively. Let's see here. It looks like we have another question.
Yeah, and I'll take this one actually. So
Okay. Yeah.
Rachna asks, recent Trophy Point email said that 12% notes to be reduced to 10% or the capital return. Is something like this anticipated for the 10% note? So yeah, so in our previous offerings, we had a 12% note for investors over $1 million, and then it was increased to 2.5 million thresholds. And lately, this market has proven to be very attractive to Wall Street and institutional money. And so tens of billions of dollars are coming into our space now for the types of loans that we do. And that's actually a good thing. I think it shows a lot of validation for the private lending real estate space or segment. But what that also means is when there's so much money coming into our space that many of our competitors are now offering lower rates in order to gain market share. And so we used to lend out at 12, 13%, and now we find ourselves lending at 10.5, 11, 11.5%. Well, that doesn't work if we're paying investors 12%. So we have suspended the 12% program pretty much indefinitely. And we're also repricing our 12% investors. And like Rachna pointed out in her question, the option is we'll give your money back, or if you'd like to stay with us, earn 10%. And I'm pleased to say that, 9 out of 10 investors are sticking with us and accepting a 10% rate versus the 12. Given all the things that we talked about, like we're reliable, we have a first loss position, it's steady, we've never missed a payment in the 21 quarters that we've been doing this. And so we think that 10% is still attractive for what we offer. Then Rach's question is, do we think that we would go lower than 10%? I think the short answer is no. I don't think I ever see us reducing our notes below 10% for at least the investors that are $250,000 and above, and you earn 8% if you're less than 250. But for those that are above 250, and that's 60, 70% of our investor base, we do not see going below 10. And I don't think I would even be in this business for my own $8 million that I have in my own money, my 7 million that I've put in the business. I don't think I would want to earn less than 10 either. So if something happens where we have to lend at less than 10, I think we've got some bigger conversations actually to happen on potentially winding down the fund. Not to scare anybody, I don't think that's going to happen because I think for what we do and the risk premium that we charge, it's always going to be above 10%. That's my gut. And that's very rarely do private lenders lend below 10% anyway. They may lend at 9.99. That's still pretty much 10. But I don't ever see hard money private lending going below that for the short-term duration type of notes that we offer. Now, there are like rental loans that you can get, like 30-year rental loans that are in the 7% range, but that's not what we do. That's a totally different type of product. But Rachna, to answer your question, I don't think we're going to ever go below 10. If I have to charge below or have to give investors below 10, there's a bigger problem afoot. And in that case, we'd be talking about potentially winding down the fund or doing something entirely different.
All right.
Thanks, Danielle.
Next slide.
Yeah. So yeah, tell us more about your particular role, Danielle, and what do you do on a day?
Oh, what don't I do? No.
Yeah.
So yes, I am the head of investor relations and marketing for the capital side of Trophy Point. So, and my main, I basically make sure that we are aligned with all of our core philosophies and prioritizing transparent communication, focus on our investor satisfaction. So that is my main objective. But then we have all the other stuff that I do. I handle all the paperwork when it comes to onboarding retirement investments. So the paperwork when it comes to self-directed retirement funds can be a little overwhelming. And so I take it on myself. I get it all filled out. That way I can just send it to our investors I make the initial contact with the point of contact at the custodian side, and then everything just kind of like flows from there. I handle the quarterly distributions. So every quarter when our investors get their payouts, I'm responsible for going in, making sure that everything looks copacetic, overseeing all the operations for that. I also oversee all the compliance and regulatory requirements, handle investor onboarding. And any crisis or any special situation, I handle all of that communication as well. And that's That's what I do. That's my
Yeah.
daily, that's kind of my daily routine.
And I can tell you, Danielle, from the leadership team, we appreciate it because when it was 50, 60 investors, that was relatively easy. But when you manage 250 plus, I like how you put the bullet point of crisis and special situations, because when you manage that many investors, we do sometimes are faced with,
Oh yeah.
emergency redemption requests.
Yep.
Even though we have a lockup period, we do try to listen at least and see what we can do. And we
Yeah.
sometimes make exceptions for returning money if there's an emergency type of situation. And I appreciate you managing all that, because it's 250 people's retirement savings and
Yes.
earned money that you're directly overseeing.
Thank you. Here's my contact information. So please feel free. It's my phone number if for those who need to. Thank you, Chad.
Chad just says Daniel and the team is fantastic. Thanks, Chad. Appreciate it.
Thank you. And that's one of my emails. You'll also see Danielle at trophypointinvestment.com. So either email is fine. I do respond to both of them, and that is my direct phone number. So please, everybody, take down my information and get a hold of me with any questions. I'm always happy to help. And it doesn't have to be an email. We can jump on the phone. I can do a Zoom call, whatever you need. I'm here for you.
Thanks, Danielle. So we're coming up on time, and I'd like to get you out of here by 12:45. So any other questions? Any topics of discussion? And it could be investor relations related, or it could be even, if you have thoughts on my thought, if you're wondering what I think of the market or competition or even tech, love to hear it. Valerie asks, are you enjoying this industry? I'll take that one. I appreciate the question. I ask myself every day, like, am I enjoying what I do? And I genuinely do enjoy this industry, and I'll tell you why I enjoy it. I love deals more than anything else. I love making deals. I love seeing deals and opportunities. And Trophy Point has become my personal platform to scratch that itch where, 50, 60 borrowers, clients come to us all the time for their deals. And I love seeing how they got the deal, what they think they can do with this property that's in bad condition, and see what they think they can do to make it better and make money off of it. I enjoy the solving problems aspect of it more than anything else. I derive a lot of satisfaction out of seeing good deals, of making good deals happen. And you, the investors, are also kind of part of that as well, because you're directly helping solve really important real estate problems. And in many ways, like indirectly, you're also helping revitalize communities. I don't consider myself Mother Teresa, but what we are doing is revitalizing communities, because you're taking a house in bad shape, fixing it up, upgrading it, and putting it back into the market for another family or another person to enjoy. That's really important, because in today's, America, at least, we're not building houses at the rate we should be doing. And then there's a housing shortage. And depending on who you believe or read, they all agree basically that we're short 3 to 5 million housing units. So the act of flipping and the act of, buying investment property, especially houses that are in bad shape, because that's typically what our folks buy, and fixing it up and upgrading it, you're literally putting a good house back on the market for someone else to enjoy, either to buy or to rent. And I enjoy being part of that value cycle. Great question, Valerie. Any other questions before we break? Well, I know we don't have a slide for this, and I'll end on this final point. We always have an annual meeting for investors and even new investors. And so we just decided pretty much yesterday what that date was. It's April 25th. It's always typically the last weekend of April.
Yeah.
So put it on your calendars. We're going to definitely publicize that through our newsletter and our future communications. But 25th April is our next annual meeting here in Atlanta. So we hope we can see you there. All right. Doesn't look like any final questions. So thank you guys so much for joining us. Thank you, Danielle, also for opening yourself up to the hot seat here. And I'll let you have the honor of picking the next person for the team members. So that'll be great. You could pick the next victim.
Okay. I'll have to think about that one.
Yeah,
We
did. We just had a last minute question, actually, Rachna. How soon can the liquid note be started? So Rachna, if you're an existing investor, it's available to you basically. So go ahead and reach out to Danielle if you're an existing investor to get onboarded with a liquid note.
Yeah. So Nancy wants to be the next our next one.
Okay, sounds good. We may hold you to it. All right. So no other
All
questions?
right.
Thank you all so much.
All right. Thank you, everybody. Bye-bye.
Thank you. Bye-bye.